Good morning. Today is Wednesday, June 12th. No, it is July 12th, actually. It is July 12th, 2023. This video is going to be a little bit different. I want to look at some of the previous cycles that we've had for cryptocurrency and seeing how they have any type of similarities to where we are right now. So the one that I really want to focus on is 2017. So this period between about 2015 and 2017, this major run up and then the subsequent crash that lasted until about 2019. So let's take a look and see where we got. So again, there were actually three major run ups in the past. Well, a couple. So you had there was a run up in 2013. I don't know if you can see this little bump here, but that was huge. There was a huge gain actually. That one we ran from. Yeah, so 35,000% from top to bottom, like insanity. Like the month of November 2013 was just insane. Like it blew all types of stuff out of the water. The thing is, most people didn't really know about cryptocurrency at that point. So I mean, it's most people missed that one, unless you were just deep in the space for whatever reason. You were not gonna be able to catch that one. So after that, it ran down for roughly a year, 14 bars right there. Actually, it might be 13 because I think I started that on the wrong one. So on this down candle, we went down for, exactly 13 months. So a little over a year. And then we kind of consolidated here in this range for a little while. So kind of from here to here, we consolidated. And then we finally broke out of that range. So that lasted for 19 months. We're on the monthly chart right now. So each one of these candles is a month's worth of data. So that this range went on for about a month, and then we kind of broke to the upside and never looked back. So yeah, let me see. We came up here, went down. This was a bull trap to where, people thought we may start going back up to the upside, and then we just capitulated down to the downside. Coming up here, looking at the same way that we did in 2013. So we went for the all-time high was about 19,800. So we ran for 10,500%, about 11,000% that we ran in the course of 2 years. So just, crazy money made in that time. So if we look down here, like this really, if we're being honest, like you had really this whole time frame from, that probably would have been a decent time to start dollar cost averaging potentially. Once you started doing that, if you plan on holding for the long run. But again, this was like earlier in crypto when crypto was very much still magic internet money. Most people didn't fully get a good grasp of like what crypto's potential could be until later on, after 2017, 2018. That's what woke a lot of people up. But then you also had 2019, really it was 2020, post-pandemic, or actually in the middle of the pandemic, and then running all the way until like early 2021, through I think about October, November of 2021 is when you hit your all-time high of about 69,800. So we had about 2 years to where you could kind of dollar cost average and still be in this range, and where you're just continuously buying at this point, buying, and then it just shoots off. You're building your position right here. This is where you build a position. So yeah, we came up here, probably had some type of retest on the monthly chart, and then we just absolutely ran up on a tear. For how long did that shoot off last? Like this was, if we say we started right here, and we ran up to the all-time high, that was 8 months. So it was just 8 months of pure upside on price. You had a little pullback here for whatever reason in September, but that's fine. A good retest. I think it was a healthy pullback down to this level. Which did create an imbalance here, if you can see that, and then it just shot off up to the upside. So let's take a look at the weekly chart and see where we got from there. So we'll go to, I want to go through let's go to 2016. We'll go to June of 2016. This is July 2016, but that's fine. If we look at it here, we're in the bottom. Where was the all-time high? The all-time high was right here. Yeah, so November of 2013. Let's look at where from the body of this candle, from the body of this candle all the way down to here. We had, a test and a test and a test, and then we hit it one more time. And then, we came down, and then we kind of broke out of this long-term downtrend. So actually we can probably pull that a little bit steeper and use the bodies of these candles. So we have these candles right here, some of the wicks, and I think that's a pretty good downtrend line, right? This is the time when Bitcoin's probably about, we got all the way down to a low of 167, so less than $200 per Bitcoin. Imagine what, if you could have scooped up some then at that point. We just kind of consolidated a little bit, but then I pay attention to when we start breaking structure. So this was a very minor structural break here on the weekly chart. We didn't break structure. We technically did break structure right here, but we didn't close above. The first time we closed above this structure right here was not until, let me see, that is December. So we went all the way from here to here. And that was, 392 days? So a little over a year. It took a little over a year for us to start breaking up, doing some major structural breaks. And then maybe we called this one another structural break here. And that took, once we had that first one, it took another, what do we say right here? Another year and a half. Well, no, another half year. So about 6 months. For us to break the next weekly structure. And then we, went down again, but then it was off to the races. Like there was no looking back. Once we broke that major structure for the second time, it was gone. So we came back down, healthy pullback, really down to this level, that 462. Pull back down there, it filled up all this, this gap that had been created, this imbalance. And then we just ran off. A little pullback, buy the dip, and then we jump up again, buy the dip, boom. And then we just went all the way off to the races. And then you had an opportunity to buy the dip here. You could have bought the dip here, could have bought the dip here. It's one of those things with dollar cost averaging. It's like you want to always be buying if that's if you found an asset that you believe in and that you believe can actually do some numbers over time. You want to be consistently buying, buy here. But when it dips like that on the weekly chart, dip, you buy that. And then, another dip, you buy that. And then dip, you buy that again. And you just keep on going until, you get to the top, and then you have some type of other confirmation that you've broken out. So at this point, we did have that confirmation that the bear market was over here. And then we jumped up here, and then we started breaking structure again. And one thing that I like to look at is the parabolic path of these different of Bitcoin, right? So if I take this look, where is it? Path. Let's just say, nope, that's not what I want. I want a curve. Take a curve from here, and then run that up here. Let's see if we can get some type of parabola to see where we're falling into or out of. So let's see if we can fit that. This one I did say, I think I said in a different video that this is a little bit more of an elongated parabola to start. Let's see if we can. I probably should have done this before the video. That's fine. You live and you learn, right? But anyway, you go up here, and let's just say that this ends up continuing. Once we fell out of this parabola, and actually it's probably a little bit sooner than that. Once we fell out of that parabola, it was definitely a lot sooner than that. Yep. Okay. Well, we'll talk about something else. I will come back on another video and explain that parabola, because there was a period where we fell out of that, and that was an absolute confirmation that we were done with the bear market. I'm sorry, the bull market, I should say. But one of the big ones that we did see was it happened a couple times on the way up, was these engulfing candles. So when you're in an uptrend, bull trend, you're looking for these black candles, and then you come down, and then okay, well that's a pullback, but we're still very much so in this way. And when you see a major engulfing candle like this, even though it didn't close below, it basically ran through two major bullish candles. That should be a pretty good warning that, hey, we may be going somewhere else. And then you had another week behind it that was also bullish. That should be some type of confirmation that, yeah, we probably need to consider going another way. The third confirmation was when we were not able to get back above this candle. So if we, came down here for a little bit, that could have been a healthy pullback. But when we couldn't get back above, this is the time it's like, hey, all bets are off. We need to go ahead and start selling. And then you ended up having another engulfing candle right after that. So at this point, you had 1, 2, 3, 4. You had a month's worth of data that suggested we should probably start selling. We should probably start selling and get out of our position. This is probably your last major chance to do so, and still retain your capital. But again, we came down, and this is a decent level right here. Actually, I'm interested in this. So we have a level right here. Right at about 6,100, we have a level. Let's see if we can fit that a little better. Yeah, that's good. So 6,100. The interesting part is like Bitcoin loves like these key levels, right? So right now and at current time, we're dealing with this $30,000 level that we can't seem to break. But when we do, it's going to be spectacular, right? So you came here, you came back down on this weekly chart and retested, and then kind of ran up. And then we didn't come back and hit it again until we did this, tested it again, boom, tested it again, boom, tested it again. And then you see it keeps getting smaller and smaller until you finally break down and capitulate. On the way back up, you could see it ramping up, and then it kind of slowed as it reached there. And then, finally, once we rocketed it off, we get into the next stage of things. We come back down, we test it, bounce off again. And even this is the COVID candle. This is the major candle that caused that was due to COVID and whatnot. So you see, this is like 316 right here. I want to say they made those announcements somewhere between like March 10th and March 15th. So this, even with this major global news story that had come out about COVID, we still were barely only able to violate the 6,000 number. And that's about as low as we got. So we got all the way down to like 3,800, but we never closed. We closed still somewhere in this like 500 something range, which, if we're being honest, we can probably draw a zone here that still would adhere to that. So let's do this. We'll take a rectangle here. We'll go here. And if I draw a line all the way, this should capture all of the candles and most of the wicks here. So we got the whole bodies of these candles and these and so on and so forth. So again, we're dealing with this range. We're dealing with this range right now in somewhere between like 5,300 and 6,300. So it's about $1,000 range there that we're dealing with, or that we dealt with, because it's over, right? Even COVID couldn't break that. So again, that proves to be very strong. And gives me a little bit more credence of where we're looking at right now with the $30,000 level, that, hey, this level is probably pretty strong because I've seen this behavior before. So just something that you're looking at, right? So again, we've come down, and really your opportunity to sell and get out of it was right here. But again, that major run up. So let's see what like some of these run ups were in the actual, when we were in the heat of the bull market, right? So we come up here. I'm looking at places where we just absolutely rocketed it off. Before we pulled up, like this was a 200% increase in 2 months, and then we pulled back, and then you had a 163% increase in a month and a half, and then you pulled back again, and then you had a 113% increase in about it was a little bit less time that I actually get to see. And then you finally had, let's take a look here. $260% increase. That was the blow off top. So that was your blow off top, and that happened in 35 days. But like I said, so a month. These things happen very quickly. So from top to bottom, again, you had somewhere in the realm of 118%. I'm sorry, 1,800%. So almost 2,000% in the midst of that. The last halving, I want to say, it happened somewhere in 2016. I think it was like July of 2016. But post halving, you do have this major run up that occurs. So I mean, the halving is important there. Let's go down to the daily chart and get a little bit more granular. We will go to 2016. Let's see what we can do here. There was a decent amount of opportunity here. These were some major run-ups here. crazy run-ups here. So what was this? This is 47% in a couple days. You had a run up. This is 2017, the beginning of 2017. You had a 68% run up before some consolidation, and then you had another run up. This is you would have this can. I don't know what happened on this candle, but that would have taken a lot of people out, because I mean, there's no way it comes all the way back down there. I'm actually interested to see what type of news stories we might have had on that day. And then we had a run up here to 244%. So yeah, this is when things really started taking off, and we started just going absolutely ballistic for these different time frames. So is there anything else I want to look at? Let's see what the moving averages did. Because one thing about the moving averages is that you see they start to dance once price starts to dance on top of these moving averages, and it's barely even violating the 50 moving average, which is this white one. Then you start to have that's when you know you're really in the bull market. So you don't want it crashing all the way down, then to the 200 or the 100, then coming back up. But yeah, if it stays somewhere within this belt of 50 to 100 exponential moving averages, should be pretty good, right? And then this one came down. We had some type of flash crash here. I don't know what that was. But then once you start getting on top of the 50 moving average, and we're not even coming back, then that's when we're truly in here. And then you see we're on top of it, and then we have nice little pullbacks. So like this is where I would consider buying. Like once we start getting to, I don't know, the midpoint of like these two, so like, I don't know, somewhere in here, I want to buy. I'm gonna have buy limit orders right here, and then I'm gonna set my stop loss somewhere below the 1500, or somewhere below the 200 moving average. So we see that play out time and time again. So like you have this level right here, and then we come back, and then at this point we're over the bull market at this point. Like we kind of get there, and like I said, we have a blow off top here to where we don't even touch the moving average again until it's time for us to capitulate. So very interesting times for sure. I don't know. Again, there are very many similarities between each of these different cycles. So I just wanted to look at the 2017 bull run. It was like really 2016 to 2018. So this video has been about 17 minutes. I'm sure this isn't the last time I'll revisit it, but next time I do want to talk a little bit more about 2019 to 2020, that bull run that included COVID. So we will talk about that a little bit later. But if you have any questions, by all means, hit me up. ChrisTalksCrypto.com. All right. Thank you.